Good morning, SmartHER News. Things aren't always what they seem, and we're getting a lesson in that regarding the GameStop story that we've talked so much about over the last week and had a great conversation with Guy Adami about just last Friday. So Guy Adami is going to join us again. We're going to work through a week later. What do we know about the GameStop story? What are the lessons there? What's the new information coming out? Plus, we're going to talk a little bit about what's going on with the labor market. We have a new jobs report out that's giving us a new unemployment rate for America. It's lower than previous months, but we have to dig in to really get an understanding as to why. And then overnight, while most of us were sleeping, there was a lot of action in Washington, D.C., where Democrats in the Senate were pushing for a budget resolution. I'll explain what this means as we get closer to talking about economic stimulus, but basically this is going to allow lawmakers to pass an economic stimulus with less votes, and they won't need Republicans to come over and help them and get a compromise deal. So there's a lot of different things. We got a GameStop stock market story, we got a job market story, and then we have an economic story where we're really going to be talking a lot about stimulus and what that means for the economy and for the rest of us. So let me go ahead and see if I can get Guy Adami in here. Guy Adami, the godfather of SmartHER News, I think is what we should be. I mean, don't you think? If you guys joined us last week, you heard a lot about Guy's many different movie interests. I think you saw with the Godfather, we were giving a lot of different movie suggestions. So let me go ahead and see if we can get Guy in here.
Did I do that right?
It's amazing. Yes, look at you. Just 1 week later and an expert on Instagram.
It's freaking scary. I'm hitting buttons. I'm moving wires. By the way, I just want you folks playing our home game. Not only am I a participant today, can you see that, Jenny? I don't know if you can see that.
I mean, do you have your SmartHER News mug? Is that what you're telling me?
That's the SmartHER News mug that you sent my wife, Linda Snow, that I appropriated this morning for this occasion.
Good.
So good morning.
Good morning. We're fueled on facts, Guy Adami. That's what this is about.
Yes. Well, I'm fueled by other things as well. We won't get into it at this point, but absolutely.
Okay, listen. So last week you were talking to us about what was going on with GameStop. There was a ton of hysteria about it. We talked through the many different threads of this story. What do we know about what happened with GameStop today? So a week later, what have we learned, if anything?
Well, I think, we watched the stock trade up to almost $500 a share, and then we saw a couple days of ridiculous volatility. I think the stock closed in the 60s or 70s yesterday. I have to look. And so people asked me, how is this going to end? And I said, it's probably going to end where it started at about $9 a share or so, and I'll stand by that. But what have we learned? Well, I think we learned some of the things that I talked about with you and your audience last week, the fact that there's a puppet master at work, and I brought in those Godfather references and made your eyes glaze over, and you're like, "Oh my God, I got to go to Blockbuster and rent the movie." But here, I'll give you another movie. 2000, the year 2000. You were burgeoning career.
Young.
The whole thing going on, right? But a great underrated movie came on. I might have mentioned it last week. Boiler Room. Have you ever seen it?
Yes, you did mention it last week.
Okay, so let's talk a little bit about Boiler Room, because I got to tell you something. Ben Affleck is a total badass.
Oh my gosh.
He's a SmartHER News fan, right? Isn't he?
I mean, I had no idea that you loved Ben Affleck as much. I mean, we've known each other a long time. It's never come up except in this conversation about the stock market and GameStop. And I
think Ben Affleck is a genius. I've watched Ben Affleck read the effing phone book, just so you know. I'm a huge fan, but he was in that movie, I don't know, maybe 4 minutes in that movie, and he absolutely crushed it. But I bring it up because if you also remember a guy named Tom Everett Scott, do you know who he is?
No idea. None.
Yes, well, I know you don't, but he was in that movie, The Thing You Do. Remember that movie? Tom Hanks was the producer. They had that one song. He was a drummer. His first name, for extra credit, by the way, for you folks playing our home game, was Guy. And there were actually 3 movies that came out within a year whose lead character was all named Guy. I digress a bit. I bring that up because Tom Everett Scott was the guy that was running the boiler room. He was the guy behind the door in his office, and he had all his minions out there doing his dirty work for him. And they were getting rich, by the way. So I'm not suggesting the Reddit crowd wasn't doing well on their own, but in my opinion, and I'll stand by this, they were just the pawns or the foot soldiers for a much greater force. And that greater force is yet to be determined. I have some ideas on who I think it might be, but there were a lot of big people getting rich on the back of this GameStop move. And I just think they used this, the 2021 Reddit crowd is effectively the 80s, 90s, to a certain extent, boiler room crowd. And I'm not suggesting anything was illegal or anything. I'm just saying somebody was doing the work of a large amount of people were doing the hard work for a small amount of people. And that's what I think happened in GameStop.
Okay. So CNBC this morning has an article out about the most traded stocks from last month.
Right.
And one would assume that GameStop would be one of them because of all the action around it. But the data doesn't show that.
Right.
And so in this article, and the reason why that matters is because, why does it matter? Guy, why does it matter if it's not amongst this?
Well, I mean, if you peel it back, it suggests that maybe it wasn't the retail crowd piling into or trading around GameStop. Maybe it was an institution or a few different institutions or hedge funds behind it. And that sort of supports my thesis that although you know, the shiny object was the Reddit crowd, the real story was something else. And again, I'm not suggesting there's anything nefarious or illegal. What I am suggesting is in this 2021, somebody got the great idea that, hey, you know what? We could use social media to our benefit. Here, let's identify a stock that potentially could have a huge short squeeze. They identified GameStop. It's a great backstory. Oh, by the way, you know, this Reddit crowd, a lot of them are gamers. They understand how to do that. Oh, wait a second, let's look at game. The whole thing makes a lot of sense, but I think it's not as quaint, and that's a great word, by the way, for you playing at home. Put that in your SAT study guide. It's not as quaint as that, Jenna.
All right, so Art Cashin, this is a name a lot of people know. Stock market historian, if you will. He's a well-known name on Wall Street, talks a lot about what's going on in the stock market. So here's the quote I want to read, everyone. He goes, I have some suspicions that it is not a democratization. I'm not sure that everything you're reading is coming from the little guy, the public. I think there may be some big professionals in there in the GameStop trade that want to turn the crowd into a mob and get them to attack the hedge funds by buying this.
See, you say that, you know, custom art cash, and so it's like, oh my God, it must be true. I say that last week, and you laughed at me.
I did
like I'm some sort of whack job. No, I'm kidding, Jenna. I'm kidding.
I was hanging on every word last week, as was our audience, I want to point out.
No,
but this is what you were saying last week, which that there's something else happening behind here. It's not just as simple as the little guy versus the big guy. It's more nuanced than that. But then and you've alluded to this guy that you have some feelings about who it might be, but you're not gonna. So who do you think it is? Like, who do you think this is?
I don't want to put something out there and substantiate it because it's not fair. You talk about what does this thing say? Right. News fueled by facts. See that? Fueled by facts. So I'm not gonna fuel this conversation with innuendo, which is another great word, by the way. But you know, if you've done this long enough, like, you know, Art Cashin's been doing it a long time. I've been doing it. You sort of can sense who's pulling the strings here. And I think it will come out in the wash at some point. And again, I'm not suggesting anything was done. I just think people have learned how to use social media to their advantage. And in this case, they used the crowd. We talked about this as well. You know, I don't know what you think about Mel Gibson. I mean, I think some of his movies are fantastic, but The Patriot and Braveheart, I mean, who's the Braveheart in this thing? You know, because there are a lot of people lining up behind somebody that were clearly willing to die. And I use that metaphorically, but if you read some of these posts, a lot of the people say, I'm willing to lose all my money. We're railing against the man and establishment. And that's, if you think about that, that's not unlike a group of warriors behind their general or their leader. In this case, you know, Mel Gibson on his horse, or in The Patriot, Mel Gibson. Remember, that was a great movie, by the way. What was his son's name? I think was it one of the Phoenix kids, or I don't know. I'm losing my mind. Good looking guy that I.
How do you have so much time to watch so many movies and the stock market? That's what I want to know. It's a lot of time. That's a lot.
You know, the local Blockbuster does a wonderful thing. They have like this coffee and movie thing on Wednesday nights, and you know, I'll sort of aimlessly wander over there, and you never know what's going to be on.
Okay, so listen, is the GameStop so yes? Okay, last week, let's put this in chapters. Last week the chapter was that the little guy was getting a comeuppance against the big guy. Now we're getting another chapter where it's like that may not be the case. Maybe the big guy got something over on the little guy. Simplifying this. Is the story over though? Is the story over with this?
No, the story's not over at all, because I think the story here is not GameStop per se. I mean, that's obviously a very interesting part of the story, but the real story is the investment world, the trading world has fundamentally changed, and it's changed for a lot of different reasons. I think the roots of this started early on in the pandemic, and say what you want about Dave Portnoy, he's got a bad reputation. A lot of it's justified.
Just to back up, he's the Barstool Sports founder, right?
While you're watching this, you can go to your Google machine. I don't know if you can do those things simultaneously, but if you were to go to your Google machine and put up Dave Portnoy, you'll see Barstool Sports. When professional sports and when all sports were sort of on the shelf there for a period of time, obviously from March until, let's call it August or so, a lot of people who historically bet on sports legally had nothing to do. And I say that, I'm not saying that to be a wise guy. I mean, that's literally the case in terms of their, they had no avenue, they had no release for their enjoyment of gambling. And I think Dave Portnoy understood before a lot of people that, wait a second, these people have lost one thing, I can provide them something else. And I think he did it in the form of the stock market. And we termed the phrase a year or so ago of the gamification of the stock market. And that's what you're seeing now, the gamification of the stock market, because people can pick up their phones and they can literally bet on stocks the same they were betting on the Knicks game or the Dallas Mavericks game, or you're the daughter of a San Francisco 49er great. So
he didn't play.
Francisco 49. He played in the Super Bowl. Did he play in the Super Bowl? Yes or no? Did he?
He did not play for the 49ers.
Well, who did he play for? I thought he was playing for the 49ers.
So we're getting on a tangent. My father played.
That's all I do is get on tangents.
My father played professional football. Some of our new audience may not know this. My father played professional football. He played in Super Bowl IV. So the Vikings, Rams, and Falcons. But it's a difficult thing for me to talk about. Sometimes I'm very proud of my dad. But when people think about professional athletes now, they have an image of the money and the fame and all of that. And my father started playing in the NFL when the NFL was first a league. And so my mother, who was a public school teacher in San Francisco, first one in her family to graduate from college, her Genovese family, first generation Italian, thank you very much. She made more money as a public school teacher than my dad did playing football.
And isn't that the way it should be today? Yes. I mean, should that same edict be in today? Don't you think? I mean, aren't school teachers more important? But anyway, I completely digress. I'm going back to the original question is it changed? And it has changed. So I think the fundamentals, the way the market is going to be looked at and traded and invested in has fundamentally changed. And it's changed because this has now lasted a year. And I think behavior has changed such that the market has found a whole new group of investors, traders, and that's not going away anytime soon. So to answer your question, this will happen again. I don't know what stock it's going to happen in, but what you saw is going to happen again without equivocation. So,
but for GameStop specifically, is this over? I mean, will that stock route? You said it's going to go to $9, so that's going to go way, way, way down.
Right.
Do you see a second rush, a second short squeeze? So all that stuff could happen again.
But I think the move that everybody was talking about, the magnitude of the move we saw from $12 to $480 to $300 to $400, that part of it is over. So now I think you're going to see what our business we call the grind. And could it grind higher on continued short covering or new investor group? Absolutely. What scares me about this is, and if you read some of these posts, which you clearly have and I have, there are a lot of people that incorrectly believe that as long as they hold on to their shares, as long as they own the stock, it has to go back up because it's going to force the hand. That part of this equation, that part of this story is over, done. So if you believe that if you don't give in, hold the line, like in the Mel Gibson movies, hold the line, Russell Crowe, the whole thing. It's beautiful cinema. It works great in the silver screen, but it don't work in investing. And that part of the story is gone, Jenna.
Margarita has a great question. She says, does this create instability for all of us? What does this mean in general for the market? Is she onto something? Margarita.
I dig that question because now here I go. I'm in dangerous ground here, and I do not want to make people's eyes glaze over at this hour of a Friday morning. But something that we watch, Margarita, and you clearly do because this is embedded in your question. That Friday, I think it was last Friday, when you saw that huge move to the downside in the stock market, the thing that we watch very closely, something called the volatility index, or you hear it talked about the VIX, went from 21 to 40. So it basically doubled in the course of about 5 or 6 hours. And that measures exactly what Margarita's question is about, instability, volatility in the market. So I do think that's added to the volatility. But the real question, Jenna, is what's the root cause of this volatility? Now watch you put your journalist hat on. I know what you're about to do.
I'm not. I'm going to ask you, what is the cause of the instability?
Exactly. I knew you were going to do that. And this goes back to something we touched on last week before I had to run. I think the cause of it is, for 12, 13 years now, we've had this zero interest rate policy from our Federal Reserve, and they flooded the system with liquidity, and they've taken a balance sheet that historically is anywhere from $2 to $2.5 trillion. And as we sit here today, it's a $7.5 trillion balance sheet. And so the Federal Reserve, whose mandate is price stability and full employment, dual mandate. Can I curse on this show, or we try to avoid that?
I mean, we try to.
It's horseshit. It's horseshit. So I just did it. I mean, in my opinion, their mandate has become making sure the NASDAQ and the New York Stock Exchange, the Dow Jones average goes higher. And that to me, and that's listen, I know I'm going down a slippery slope here, but that's my view.
We've been down, we're like 3/4 of the way down the slippery slope, but it's one of that. Like,
did you were young once as well, like I was. Did you do those slip and slide things where do your kids have a slip and slide?
We did. Oh,
during quarantine, did he make one?
We got one from Costco that went down the entire yard. It was great. We got the soap.
Did he have to do it first to make sure it was like there were no rocks underneath?
No, he didn't. I think that would would kind of get airborne out of that. I didn't need any injuries. No one. We were trying to avoid the hospital, especially during that time. So, okay.
So you see, I've got you so off your game. It's amazing, right?
No, I'm going to pull you back
to a slip and slide.
Check this out. We're gonna pull this all together, and I'm gonna to do so. I'm gonna use my own analogy. It has nothing to do with movies. So when you're driving your car, you need oil in the car. But you don't want too much oil because you could blow up the engine. That's right. Right? You don't get enough oil, then your car doesn't run good, and then you blow up the engine.
That's right.
So liquidity, what Guy's talking about, is pushing cash into the market, getting a lot of oil into the market. We want the engine to run good. The Federal Reserve is able to do this, and we're going to allow access to funds. We're going to push oil into the market, and the engine's going to run really good. That's just very basic. The issue is that when you push too much oil into the market, too much liquidity, we can get inflation. Mm-hmm. And there's a real concern about inflation, because if you had the Federal Reserve allowing this access to cash, and there's a cash in the market, and this liquidity in the market, and then you have politicians that are looking at huge spending packages, then you're pushing a lot of oil into the market. Depending on how the engine is running, you might need it, but you can't just suddenly siphon it all off, right, guys?
100%. So for you folks out there that still, you ever use those gas grill things, right? And you turn on the propane tank, and you hit the starter button, and you just keep hitting it, and you keep hitting it. And then you're waiting for the thing to start, and maybe you throw a little lighter fluid on top.
Don't do that. That's not good.
And then you throw a match in, and nothing happens. And then finally something happens, and it blows up in your face. Well, that's what we're on they keep throwing the lighter fluid on top of a thing of charcoal. It's sort of embering, but it hasn't caught yet. But once it catches, it's going to be incredible. The reaction they're going to get is going to be one that they can't control. We talked about that last week, and that's my concern. They keep putting more and more fuel on this fire, hoping for reaction, and the reaction they want is a form of inflation. They talk about it all the time, but guess what? If they just measured inflation properly, as many of your viewers know, if you just live life, there's inflation all around us. The Fed just doesn't measure it for whatever reason. Maybe they don't want to know what it is. They're either ignorant or disingenuous.
Well, or trying to to solve an immediate problem, but the question is long-term consequences of it, right? And when we talk about inflation, inflation is when your dollar suddenly is just worth less. So we don't want inflation because that's very difficult to manage. It's not good for the consumer. It's not good for anybody. So you don't want to be in a high inflation environment. It's not good.
No, not
and
good.
So that brings us to the news overnight. So what's going on just right now is that we have Democrats have the majority in the House. They have the majority in the Senate. In order to pass big economic stimulus bills, or really any bill, you need more than a simple majority, right? You need 60 votes, over 60 votes in the Senate. And that would mean in this environment that the Democrats need Republicans to come over and help them pass legislation. In the past, that's happened, but in recent years, it hasn't. And so a budget resolution was passed. And there's so many different procedures in the Senate, but basically this will allow Democrats to pass an economic stimulus bill with a simple majority, which means they don't need any Republicans to support them. That's a whole political debate about how often this should be used and blah, 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 blah. But this is the reality. And so the thinking is that the economic stimulus plan that the White House launched, which is $1.9 trillion, is the plan that we will see that in some form over the next several weeks. And the White House wants this, they say, because we need to make the economic recovery shorter. If we make it shorter, that means we get back to normal sooner. And this is, it's not just the White House. Some economists agree with this as well. We have to do this because we're in such a bad spot. We got to at least give the economy some advantage. Others say this is way too big of a package. We've already passed billions and billions of dollars in stimulus, and some of it hasn't even made its way into the economy. So we're layering more money on top of that. And there's a concern about inflation. So those are the two sides of it. What do you think about this?
I think it's a fascinating conversation. And again, I don't want to use these wonky terms, but there's something we talk about called the velocity of money, right? And you mentioned stimulus. First of all, I don't think it's named properly. This is not, stimulus suggests that if I send somebody a $1,000 check, they're going to go out to a restaurant, or they're going to get on an airplane, or they're going to do something, right? Can't do it. I mean, so stimulus is just the wrong term. The term should be relief package, because that's effectively what what we're all talking about is relief, because there are a lot of people hurting out there. To get serious for a minute, in my opinion, it's funny. People say, are we in a recession? Well, what are we in? I will tell you, I think maybe for the first time in history, or maybe for the first time since the late 20s, early 30s, we're in every single economic cycle, depending on who you are. For some people out there, Jenna, things have never been better. For that top 5%, I mean, this has been the most amazing year ever, economically speaking. Forget about all the health things. For a lot of people, nothing really has changed. For some people, things have gotten a little worse. But I would suggest anywhere from 35 to 50 million of our fellow Americans, so that's anywhere from 10 to 13% of the population. This is 1930 stuff going on. No question about it. Food lines, job loss, just utter despair. I mean, that's what we're talking about here. And that's all wrapped up into the economy that we find ourselves in. So when you're talking about stimulus, number one, it's relief. Now, what you're pointing out is you hope you can use this money to bridge it from here to when everybody's vaccinated and this economy gets back to normal. Obviously, I understand the hope, but you keep throwing more and more fuel on this fire. And then when it's finally going to catch in September, October, whenever it is, it's going to catch and ignite in such a way that you're not going to be able to control that reaction. And that's that Chernobyl example I gave you. It's the same thing. It's exactly the same thing. And you're a fan of professional football, and I'm a huge Bill Belichick fan, not because of his Patriot ties, because he was a giant first and foremost. And if you ask him when you have him on Smarter News, he will tell you that. But his edict is just do your job. Do your job. It's pretty simple, right? If everybody would just do their job, things would be fine. I bring that up because the Fed is not only trying to do their job, they're trying to do everybody else's job as well. And that's not in their mandate, right? So do what you were supposed to do and let the government take care of other things. Your job isn't to make people go to restaurants and stuff and to make the stock market go higher. Just focus on what you're supposed to focus on. And they've gotten us in a place right now, not just our Fed, but central banks around the world, where 30% of global sovereign bonds now have negative yields. How does that end? Well, think about that. That means, by the way, and I know you know this, but If you give the bank $5 at a negative rate, a year from now, they're going to give you $4.90 back. It actually costs you money to have money in the bank. It's mind-boggling when you think about it. So you have this negative yields, you have, inflation right below the surface or right in your face, depending on where you live. It's just not a healthy brew going forward.
So quite a few of our audience wants to know, okay, if that's the case, and again, there's two different sides of thinking about a lot of this, about how you think about economic policy. Some of it is divided along political lines. Some of it is not. Some of it, there's a middle road. Moody's, the economic research firm, good reputation, they've been cited by the White House because they wrote a report that said they believe this relief package, this rescue package should go through. But they also said, if you look closer in the report, this wasn't as cited, as quoted as frequently, was that this will add to the debt and the other problems in the U.S. economy. They did say that, but their assessment was, we need it now. We're going to deal with those other problems later. So there's just a lot of different opinions on this. Our audience is asking, so how do you prepare? How do you prepare for these different scenarios? Let's say in October, we do see a lot of inflation go up. And again, that's going to hurt the exact people that have been struggling all along.
Yeah.
And so what do you do?
I mean, obviously the different verticals, how do you prepare? I mean, that is such a wide question, but I guess in terms of the prism that I look at, or for the reason that I'm here, how do you prepare in the stock market, or how do you prepare in your investment portfolio? And and I've been wrong about this. I want full disclosure. Like, I've thought the stock market is, bit of a house of cards for a while now. And as we sit here today before the open, or right around the open, we're going to talk about stock markets effectively at all-time highs. The NASDAQ, the Russell, the small cap index, obviously, and the Dow Jones. I mean, it's amazing in the course of a year, given everything that's transpired, that here we are with the stock market at all-time highs. And oh, by the way, the NASDAQ just blowing through prior all-time highs. So gives people this false sense that everything must be okay because the stock market continues to grind higher. But, the stock market is built on this, in my opinion, this belief that the Federal Reserve is going to be there as a backstop, and every sell-off in the market is going to be short-lived because they're going to be there. And the Federal Reserve is spending $120 billion a month to buy whatever the hell they're buying. God only knows what they're buying, but they are the support. They are the backstop of this market. How do you prepare? Well, if you believe, like I believe, that inflation is coming, listen, inflation manifests itself in a number of different ways. So what's going to work? Well, resource stocks are going to work. And I'm not playing stock market here, but companies that build things and make things and have the commodities behind them. So names like for example, a Freeport-McMoRan, which is a copper gold mining company, and some of the gold mining companies like a Newmont Mining and some of the silver mining companies. So those are the things that theoretically should work, sort of the hard asset plays. Banks could actually work in that environment well. And if you look over the last 6 months, the bank stocks have done really well. What could be hurt is some of these high-flying technology names that, one of the fuel that fire for these stocks have been low interest rates and this tremendous growth. I mean, does the growth for these companies get ratcheted down in a high inflation, high interest rate, high inflation in the economy? There's a good chance that will happen. So just be aware of what's going on out there. Hope is not an investment thesis. And we all hope everything sort of, you a fan of the Olympics? I'm sure you are.
Sure. Yeah.
And the Olympics are pretty cool. Actually, Olympics were a lot cooler back, in the 80s when actually real amateur athletes played, and you had a bunch of high school, college kids on a hockey team in Lake Placid beat the Russian professional team. I mean, that was cool. Problem is, you're never going to see something like that again because now our pros play as well. Guy, you're off on a tangent. I am. But remember when Kerry Strug, remember that Olympic, she was a little gymnast?
Yeah, she broke her ankle.
Look at you. And she hurt her ankle,
yeah.
But, she persevered and she stuck the landing. Remember
she stuck the landing.
Well, there's this hope that the Fed is going to be able to Kerry Strug this landing in terms of how they're managing the economy. And I'm not certain they're going to stick the landing and be carried off by Bella Caroli because that's a tough eye of the needle to thread. Just my opinion. And you said we're going to deal with it later. That's one of the comments I heard you say.
Well,
that's good luck
Moody's.
With that.
Yes, that's what Moody's was saying. And I'm summarizing, which is that.
No, but you're right. That's what a lot of people are saying.
Right.
We'll deal with the ramifications of this later. That's really easy to say, but it's so mindless to say because the ramifications with each passing day get worse and worse.
And that's because you're saying because of the threat of inflation, the load of the debt, the amount of government interruption into the stock market, which some say is support, but others say is actually artificially floating the market.
I think so. And you're talking about debt. You're talking about U.S. debt to GDP. So the level of debt. So U.S. GDP is, let's call it $91 trillion-ish. I think U.S. debt right now is, north of about 110. Excuse me. I'm sorry. GDP's. Excuse me. I'm sorry. U.S. GDP is about $19, $20 trillion. U.S. debt right now is about 24, 25 trillion. It might be more than that now. So debt to GDP is about 110, 115%. And global debt to GDP, global debt is for the first time ever over 100%. So it's not only the U.S. that's doing this, it's all countries around us. There's a global debt problem without question. And you have to wonder, what's going to happen on the back of that? And then people say, well, what have you seen that sort of indicates that? Well, have you watched cryptocurrencies? I mean, if you read anything about Bitcoin, which, by the way, I don't understand like a lot of people do, but I think it was born of this fear of the fiat currencies. I mean, you have global central banks, basically each one doing their best to devalue their currency, because by doing that, you make your goods more attractive. And this thing sort of cascades. In a global race to zero, there are no winners. But it appears as though the one winner is cryptocurrency, specifically Bitcoin.
Interesting. We had quite a few questions about cryptocurrency. We're going to have to do a deeper dive on that. Separate time, different movie references at that to really dig deep into that, because it is something that's like, psh. But just think about this with cryptocurrency. There was a question a while back. You might remember this guy about whether or not Facebook would get involved in the currency game. And one of the questions about that was that Facebook, is 2 billion users. So one out of every 7 people on the globe, 2 out of every 7 people on the globe are a Facebook user.
Amazing.
So if you think of them ever getting in a currency game, like if the US dollar against the Facebook current, I mean, it gets crazy.
It makes your head explode.
Yeah,
right?
you can't. We're gonna have to table that for another Friday. Okay, I told you I was gonna talk to you for 20 minutes. It's been 33, I'm right on track.
No, because I'm just.
Okay, final thing though, this because
people having fun. By the way, they hitting those heart emoji things.
They like, yeah. Let's see if they do it.
No, I don't know. My screen, I don't see any. The last thing I see is morning from Mrs. Cassie Sherry or something. It's not. Isn't this thing supposed to scroll?
It's good. Just relax. Okay, it's gonna start scrolling in a second. You got it. See,
you
went from There's the hearts. You went from Instagram novice to now requesting hearts.
I should take a screenshot and send it to you. Anyway,
no,
I'm sorry.
don't, because you're gonna hang up, and I can't. So part of economic stimulus, Federal Reserve policy is built on data. Part of it is built on data. We hope it's all built on data, but there's also real people behind all of this. So the reason why I'm mentioning is the final point. We have a new unemployment rate today. The unemployment rate in America is slightly lower than it was last month, so 6.3%.
Right.
We saw a little bit of a job gain of 49,000 jobs added. This is better than losing jobs, but it's not a significant amount. The thing to know about the unemployment rate is that part of the reason why, if not most of the reason why it came down, is because the labor market is shrinking because less people are actively looking for work, discouraged workers, which is something you don't want to see. So you don't want to see the unemployment rate go down for that reason. You want to see it go down because people are getting jobs. So it's not. So what do you think of this jobs report, where the jobs market is, Guy? The question is, it's not good. Is it bad enough to elicit a $1.9 trillion stimulus?
Yeah.
What is the data telling us about what we need is the question.
Well, as you know, this data is backwards looking, as they say. So is it bad enough to, the short answer is, if you look at the last 3 months in aggregate, we seem to have hit a wall in terms of job growth. And you have this stubborn, You're probably still, 11 million people since the beginning of this thing, probably still 11 million-ish is the job loss number. Maybe it's 10.
We're short 11 million jobs from April and March of last year. So we have that huge pot to fill. This is part of the reason why people say, get the stimulus and let's relief, rescue, whatever you want to call it. Let's try to fill that hole.
But the bigger question is, and that relief will help, but is it going to, I mean, if you think about this, and this is a hard subject to talk about, but if this had lasted a couple weeks, a month, I don't think companies would have had enough data to support what we've seen, a transformational job workforce right now. What do I mean by that? Well, look at what we're doing. Look at where you are. Look at where I am. I mean, companies have learned that they can do so much more with so much less. And now you have 9 months worth of data to support that. And although they would never admit it, there are a lot of jobs that aren't coming back because of exactly that. Now, this was probably headed that way anyhow. All the last years just sort of accelerated the pace of that, unfortunately. But as you also know, technology is the greatest deflationary force in the history of mankind, and we're living through one of the biggest technological booms, maybe since the Industrial Revolution, if you think about it, right? And that, by definition, is negative for jobs, and it's a huge deflationary force on one side, and have these huge inflationary forces on the other side. That's a dangerous mix of things. So to answer your question, I'm not that encouraged that you're going to see the job gains necessary to get us back to what's called full employment, or get us back where we were a year or so ago, because the world's fundamentally changed, and that's problematic.
Yeah, that's really interesting. There's certain things that you can control and certain things that you can in life. And that's what I love about covering the economy and covering the stock market and all of that. Some of those lessons are really in technicolor. And so in the backdrop of all of this noise that we're hearing, all of this debate about who's right, who's wrong about economic policy, there's an element to all of this that is just human nature, you know, and how have we all changed in the last year? How are our desires to work and how we're working changing? How are our consuming habits changing? What do we need differently? You know, those are things that the government or anybody, economists, businesses, like, as you said last week, we are the power behind all of this. Economic growth, the success of the American economy really comes down to the American consumer, and no one really controls them, you know, and how we're behaving and how we're building and how we're shopping. And so there's always an element of that you're like, see how it works out, right?
Yeah.
Let's see how it all works out.
And to sort of build on your point, one of the problems out there as well is there are a lot of things you can't control, but there's a group of people or organizations that somehow think they have the hubris to think they can't control it. And that's problematic. And that's what's gotten us to a $7.5 trillion balance sheet for the Fed. And, you know, a stock market, by the way, not to really get all that wonky in the last few minutes, but Warren Buffett, who's the greatest investor, you know, people will say in the history of mankind, the one metric he looks at over all others is something called market cap over GDP. So the market cap of the S&P 500, how much the S&P 500 is worth over GDP. And right now, historically, 120% is something that flashes red for him. Well, right now, the market cap of the S&P 500 is 190% of GDP, 190% of GDP. And that is flashing red. And that's, again, you talk about where's inflation and things overvalued. Well, look no further than the U.S. stock market for that. I mean, there's just asset inflation all around. I mean, we can talk about housing numbers, and that's for another SmartHER News Instagram. Is this Instagram Live? What is
we do have a great, by the way, we do have a great, our audience, while you were talking, has actually come up with the most brilliant name of this segment, which I'll get to in a second. I just want to say one thing, as we are talking about.
Wait, I know, they probably call it Beauty and the Beast, or so they're really clever. I saw the movie Beauty and the Beast. No, it's not. Okay, wise guy.
It's actually so much better than that. And I'm a little insulted that you would even think that they would suggest that, because you know what? They're just into SmartHER News. That's what they're into. They're not even looking. They're just like, they're just taking it all in. What I want to say is, like, there's a very real side to this. You know, I think even in our own family, we've experienced so many different things during this last year. My brother, who works at a restaurant, he's a great cook. He's been unemployed for a year, you know, and there's a real, like, that's a real unknown, like when he's going to work again, you know, and this is very so I don't even, when we're talking about the stimulus and we're talking about the policy around it, you know, there's real people that are hurting.
100%.
How do you help that? And that's fundamentally the question we're all asking. Like, how do you actually reach through and help them? That's why we're seeing all these different things, whether it's Dave Portnoy with his small business, you know, fundraising. kind of crowdsourcing. You know, there's also all these other creative ways. So sometimes we get very locked in on what the government has to provide a solution. And that's a very modern way of thinking. One of the things I did, guys, I went to Ellis Island. This is my tangent, but this makes sense, I promise you. Went to Ellis Island, I talked to the historian there. And one of the things I really learned in that time, it's never left me, is he said, you know, the way that the American public has looked at their government has changed so drastically over the last 150 years, because the federal government used to be very weak and very poor, and everyone wanted to be associated with their state, not necessarily the government. And now we've switched, so the government is very wealthy, and the states their relationship with that is we've changed that. And so whether that's good or bad is up to probably your personal experience, but it's just important to know it hasn't always been this way, you know. And so I don't want to forget that we can broaden the conversation to include a lot of other, you know, it's not just the government. It's not just the government is the point. It's the consumer, it's others that are our player in this big picture. And so I don't know. The news gets so focused on the government, including me. And I just need to make sure not to do that as much, you know?
Not. Amen, sister. And Ellis Island, for you playing when we can travel again, that's a must-do trip for you folks, you guys and gals out there.
It's great.
So
okay,
I want to hear this segment title. What's it going to be called?
So I just want to point. I had a thought about, you know, like we could do like The Godfather. Like I had this whole idea, like it was really cool. No, Kelly, thank you very much for the suggestion. Instead of Friday, it's Guy Day.
Oh, I like that. I like what she did there. That's really. Can I give her
Kelly,
like a star or something? Like how do
I don't know. Where's Kelly? Kelly's gonna have to direct message me. I'm gonna send you, Kelly, one of these.
No,
because you get one of these.
I want my own mug now. Now you got to go to your manufacturer. SmartHER News Guy Day.
Guy Day. It's Guy Day.
I'm just saying.
I mean, that's genius. Maria liked it. Jody liked it. I'm getting a lot of hearts. So I just think we're good. Okay, guys. So this is, as you can tell, I'm totally unreliable for time. But I think we had a good time today.
I had a blast. I could rattle off movies and songs and all kinds of stuff. And I cursed once. I apologize. I didn't mean to offend anybody. I'm sorry.
I don't think anyone's offended. I just think sometimes people listen with their kids around and maybe they don't want them quoting Guy Adami.
Right. That's right. That's an excellent point by you. I didn't even think of that. But you know what? Let's get real here. These kids are going to learn the word anyway. They might have to hear it from me.
At least they could say, "Mommy, Guy said it."
Right.
And
so
and then okay. if they start doing a deep dive on inflation, if your 5-year-old that if he says the bad word but then he talks about inflation, maybe you're okay with it.
It's good stuff. I had fun.
Okay, Guy, thank you. I appreciate it.
See you later, Jenna-Lee.
Sayonara. Guy Day. You guys, Kelly, win. Hope that was helpful. I know we covered a lot of ground there. There's a lot of difficult concepts. Inflation, by the way, not easy thing to wrap your head around. But the big headlines are the ones that we covered. So we do know that the job market, we did get a little bit of a snapshot that's showing, the headline is going to feel better, right? It's going to feel better because the unemployment rate is lower, but the reasons why it's lower are not assuring for the job market. And so we're going to watch the economic stimulus. What are Democrats going to do? How are they going to pass it? Again, they passed this procedural vote that's going to allow them to pass the stimulus if that's what they choose to do, which is what is expected. How will that actually practically be applied to the U.S. economy is the big question. And that's why I know I was rattling a little bit too, but as we're having these conversations about these big ideas, we don't, big theory, right? Inflation, deflation, economic stimulus, institutional investors and GameStop and all this. At the end of the day, it's really the people that give the lawmakers power to pass the stimulus. And that are a factor that are very unpredictable. No one can tell you what to do. Sometimes you feel that way, right? But we're an element in this economy that's moving and changing and growing. And so that's why also it can be very difficult to figure out monetary and fiscal policy because there's so many changes happening at one time. So there's a lot to think about there, for sure. I look forward to your questions and comments about all of this. And thank you very much, Emily. I see that for the first time, I feel like the news leaves me more educated rather than opinionated. Thank you for that. That's a huge compliment. I know with Kai, we kind of get into a, chit chat, and I just want to make sure this is, I always find it really informative to talk to Guy, but I always want to make sure that you all get something that's really valuable for you. All right. So I'm going to go ahead. Yes, just so everybody knows, I saved these videos. Last time Instagram, I wasn't allowed to save it. So it just pushed it out on our feed, but we were able to grab it and also load it onto YouTube. So people were able to share it that way in case someone was not on Instagram. All right. So Friday Guy Day, new hashtag. Let's see if we can have him commit to maybe not every Friday, but at least a Friday a month, right? I think so. Thank you for the great ideas. Thank you for the support at SmartHER News. We really appreciate it. And we'll continue to watch all these stories for you and more on the website a little bit later today. All right. Have a great day, guys. And I'll see you on smarternews.com.